All right, hi everybody. It's Friday, and we are on the floor of the New York Stock Exchange with Jim Cramer to talk about the markets. Jim, the Dow is up, industrial stocks rebounding here.
Yeah, after 8 straight down days, not something that's 40 years. And it's all been dribs and drabs. I mean, one of the things that people should recognize is that other than Caterpillar, no one stock has been really down a lot, but they've all been down single digits. And with the exception of Verizon's been the standout. And I think it's possible, of course, they can bounce. I think some of the bounce has to do, as I wrote in Real Money article, that people like to see oil up. I think that that's not a good reason to buy. And another reason is that they feel that there might be another attempt to have a truce in the trade war. Again, not a reason to buy. Because I don't think there will. What I think is what I said in Real Money and in Mad Money last night, which is that some of these stocks are becoming great values. And if China blinks, as opposed to a truce, if China blinks, then you're going to wish you bought some of these stocks, but they do have more downside. I would rather reposition into a seller mode if you have small gains of what you bought yesterday. We're not going to for the charitable trust, we're not going to flit in and flit out. I just gave a very long soliloquy about why 3M is down from 259 to 195, and now suddenly everyone's worried about it. I mean, I think that as stocks get to 3% yield, they've been able to stabilize. My friend Matt Horween sent me a list yesterday of a bunch of 3 and 3.2, and I think the stocks are bottoming because I think interest rates are going lower, and these are accidental high yielders. A lot of these are very high quality companies that have been through a lot of downturns before, and before you just throw them away, remember they've been going right down since January. And before you pile on to the retailers, remember they've been going up for multiple months. And unless you have a CarMax or a Kroger, which had been down even as recently as April, May, then I think you have to be a little more circumspect on the domestics that you pile in here. And you should be slowly selling those and slowly buying the internationals, not aggressive and not here, because they've had too big a move this morning. And I'm afraid when you come in, with the exception of oil, the oils are bouncing. When you come in on Monday, I think there's going to be more negative news next week about trade and China and trade in Europe.
Jim, it was a
lot of work on this, people. I have spent, I'm older, been around, and there are people who are connected to the White House whom I've been close to for many, many years. And I'm not saying anything out of school. I'm just saying that that when I see the news stories which say that there's another attempt going to be at a truce, I make calls to see whether those news stories are accurate. And they're not.
It doesn't seem like the president wants that.
Well, the president is thinks that the economy is strong, and if you can't do it now, when you're going to be able to do it? And I think that that's really a theme. I also have been working myself on things involving China weakness that I will reveal soon that make it so that backing up my assertion that China's a paper tiger.
Okay, Jim, it was a rough week for Starbucks, but the stock seems to be rising on your scoop this morning.
Well, Howard sent me, I've known Howard for many, many years. And Howard wanted me, I was, admittedly, I always say I was, when I have an interview with a CEO and I'm not happy with the facts, I ask about the facts and I try to ask them in a way that's accessible to viewers. The stock goes from 56 to 50, it becomes a different animal. Because at 56, it doesn't reflect the slowdown in comparable store sales. At 50, it begins, if not totally reflects them, and you got 2.7% yield. So you buy it at 50, maybe it goes to 47. But Howard sent me an email saying, listen, it's wrong to bet against Starbucks. Historically, that's been true. They're human and they can make mistakes. That's true. To say that China is not going to grow anymore does seem wrong. They can pivot and adjust. And so what I wanted to do was read people what Howard said so that people understand the bull case, which I did not present, just to be clear. David questioned whether this is one where Kevin Johnson's got Howard looking over his shoulder. I come back and say that people want to know what Howard's thinking. And Howard said the stock is cheap. Now, in the email to me, which he said I could share, he said he rarely does this. And what I really wanted, the point I wanted to make by reading is that's very true. He, in all the years that I've spoken to him, it's only been, I've been dealing with him forever. The thing that was really important takeaway is that is not his style. His style has never said to me that the stock is cheap. Never. I mean, he might point to a big buyback, but he has never just said it's cheap. Other than perhaps when he got things, when he came back after being retired and he got things on the right way, and the stock hadn't responded yet. I got similar verbiage, and that was the point of inflection. I'm just putting it out there. I'm not saying go buy Starbucks. I do think that knowing what Howard Schultz says is very important.
He has a few more days left as executive chairman.
I mean, just be careful. The reason, one of the reasons that I said it's not my favorite group. We sold Darden yesterday, and Darden's doing really, really well. And we sold it. And that's because I felt that, I'm just not, the restaurants are beginning to reflect too much good news. And I'm concerned about China. I'm concerned that that's a natural way they could retaliate. But Howard has always assured me that they're maybe one of the best employers in China. And so it would be kind of a last resort for China to go after them.
Well, you booked a 26% gain in Darden, so congrats on that.
Yeah, I think that's important. Thank you.
Meanwhile, Jim, Bernstein analyst Tony Sacconaghi talking about Tesla, how their automotive gross margins might be overstated.
Yeah, I mean, overstated is a term of art when it comes to the SEC, but again, to reference my friend Matt Horning writes with me, the Herbalife had a lot of things that were quizzical that the SEC didn't like, and Bill Ackman bet against them, and what good did that do? I mean, if you're betting against Tesla because of the way that they account for the car costs, I just don't think that's going to change the balance, but Tony's done some rigorous work. This is something that had been Anton Woolman, who's done some fabulous stuff for us, has mentioned. This is not new, but Tony's a tough guy, and that's going to resonate today, but I don't think it's if you're going to shoot the king, you got to kill the king, and Elon Musk is the king.
Well, Elon Musk called his question a few months ago on the conference call boneheaded.
Yeah, look, Elon is a man I admire greatly. I just admire him greatly.
Jim, last night on Mad Money, you had the CEO of Okta. It's a cloud identification company.
Yeah, this is a very expensive stock. Now, we've been highlighting the cloud kings, Red Hat, which we have on tonight, Mad Money. It stumbled badly last night. Okta is part of it's identification. It's a multifaceted identification of yourself so that you're not ripped off. It's another way to make sure that there's cloud security. My favorite cybersecurity stocks are Palo Alto and Proofpoint, and then CyberArk, and then NICE, or NICE sometimes ahead of CyberArk, Fortinet, and then FireEye. But I found the stock interesting, but I do think at 16 times sales, that's expensive.
Yes.
And I want people to know it's an expensive stock.
Up over 100% over the past 12 months.
Look, some of these stocks have just been red hot. And we did a piece earlier this week talking about how maybe they're too hot, or at least knowing the risks. And the San Jose Mercury News picked it up as saying that Cramer is very cautionary about these stocks. And I didn't think that was necessarily a correct takeaway, but what I was saying is know how expensive they are, and that doesn't mean they're too expensive. Just know how expensive they are, so you know that you're buying something more speculative than you realize.
All right, Jim, we'll watch your interview tonight with Red Hat, the stock getting hit.
Yeah, that was a tough quarter, and there was a lot not to like there.
And we'll talk more about Red Hat in our ActionAlertsPlus.com video, so please join us there. Jim, thank you very much.